anniversary month. Happy April. And kicking off Q2 here with the Pulver report. If you're out there typing wire, yes, everything's coming through loud and clear. I'll get the risk disclaimer up here in just a moment. Make sure everything's coming through on my end. And nice to be with everybody today. Here we go. All right, risk disclaimer. To understand this risk in trading, please don't always use trade capital only. Do not trade with money you cannot afford to lose. So you trade stocks, options, futures, forex, cryptos, you know the deal. All right, good morning, Donna. Morning, Don. Chris, Linda, good morning. Nice to see everybody. Got there typing wire yet? Here is the chart. Let's jump into it. So I'll take a look pre-market futures. We are pointed upwards. Take a look at the news for this week. Don't really see anything super staggering. I'm going to have a short week, taking a little trip to get some sun this week down to Florida from what was snow yesterday to now sleet. Looking forward to getting back out of Michigan for a couple of days. All right, so high impact news. See what we have. So for this week, we have to filter. So high medium. All right, anything that stands out. Job openings again. 20 jobs out there. So gross job openings coming to be positive this morning. Or actually, did it just come out? March 29th. That was last week. Let's say this week. There we go. Lighter calendar. RBA cash rate decision expected to be the same. So with the curve of central banks raising rates, RBA continues to stay the same at 0.10, but the Aussies get a lot of love as a commodity risk transfer, still maintaining some resiliency and strength. Read up on the RBA statement this week, Tuesday. That's coming out at 12:30 a.m. Eastern time. ISM numbers for the U.S. at 10 a.m. Tuesday. Crude oil inventories. Again, the big news last week was Biden administration releasing, what was it, 180 million? So 6 months, 1 million barrels a day, roughly 180 million barrels to tame, inflation / low energy costs. We'll see. I said last week that I think the Fed and the Biden administration are pretty much just focused on 6 months, focused on midterms, trying to keep things stable, keep the markets pacified, I suppose. I don't know if that's the solution. We'll see where it goes in the next 12 months. But we'll see if oil, ends up making fresh lows, or if it just hangs out around $100. So maybe the whole point is it's a plateau, so it makes people feel better, but it may not solve anything. Oh, you can't hear me? That's weird. Hang on a second. Testing? You can't hear me? Weird. Okay, one second. Testing. Testing. Hello?
How about now? Better? Testing, testing. There we go. All right. Okay. Yeah, little connection issue, no big deal. All good. All right. So I don't know where everybody left off, or you probably couldn't hear me at all if it was low volume or muffled. So what I was doing is walking through the news for the week, and cash rate decision for the RBA expected to stay the same at 0.10. We're in a time right now where central banks are starting to raise rates, not just talk about it. So the RBA is one that is potentially being priced in for some fall, Q3, Q4 rate hikes. Again, off of near zero. I don't know what they're anticipating the RBA to raise to. Maybe they raise by 25 or 50 basis points later this year. Maybe they get up to 1% by the end of the year. It might be a big jump. I mean, the RBNZ has raised rates by 0.25, 0.50 respectively. They're sitting at 1% right now. But if you take a look at the central banks, here are the main ones. So Australia, last time they had a rate decision was a cut back in November 2020. They're sitting at 0.10. They have stayed there the same since then. We have New Zealand. They raised rates back in February of this year, so 2 months ago, essentially, or a month and a half ago, and they raised 25 basis points to 1%. The U.S., we know, is finally off of that 0 to 0.25. They raised rates by 25 basis points. United States right here, so 25 basis points now sitting at that window between 0.25 and 0.0, with 6 to 7 more hikes coming. The Bank of England has been raising rates. They raised rates again in March. They're currently sitting at 0.75, likely going to continue to raise rates. European Central Bank, Eurozone, still sitting at negative deposit territory or 0%. The rumor is that they're going to raise rates between 25 and 40 basis points later this year, but we don't know if that's the case. They talk about it again, but the Eurozone is not moving. Bank of Japan is not moving. They're still at negative deposit territory. The Swiss National Bank had a rate decision. They are at negative deposit territory. But seeing this official borrowing rate is negative, but you've been watching. If you've been watching with me, I've been alluding to some of these 10-year government bonds, and we're going to take a look at that 10-2 in a second. But the 10-year yield on the Swiss is starting to drop a little bit, but it was as high as nearly 0.75%. So there's been a big increase in these 10-year yields, not just in Swiss, but also in the JPY. Here's the JPY 10-year. So these are banks that are at zero or negative official borrowing rates, and yet their 10-year notes and bonds are rallying. So again, that's a fleet of safety a little bit, but would you like, given the choice of, okay, you're going to have to combat 7% inflation this year. Do you want to buy a 10-year bond that in 10-year maturity pays you 0.2%? You're locking in 0.2% on a compounding loss over 10 years. So that is why, it hasn't officially happened, but we're going to see a pretty massive repricing in the bond market. Let's talk about that 10 and 2. I've got it right here. I think it's the 2-10 chart that I've got. The 10-2 Treasury yield spread. And we saw some news last week that there was an official inversion. So right here, when this goes flat or in a negative territory, that is officially the inverted yield curve, right? Now, this doesn't mean that we instantly go into a recession. This is a 6 to 16 or 8 to 18 month window where it's saying that we could have a recession as soon as October of this year or as late as October of next year, right? But you go back to, if I can go back to a 5-year, right? We had an inversion right here back in August 2019, and for a brief window in February and March of 2020, we had a recession. Okay, according to two contracting GDP numbers, the little crisis, we saw volatility spike up. We had, the COVID bow on top of that, but we had an inverted yield curve here in August 2019. Here we are again. This technically on the chart shows an inverted yield curve. So anywhere between 6 to 16 months or 8 to 18 months, like I said, roughly it's like October this year to October of next year. All we have to do is have two contracting quarters with GDP to technically face a recession. Okay. Now, of that recession, that does not mean that the stock market has to go down. I hope you understand that as an investor. In fact, I think of the last 15 or 16 recessions, about 10, I think, have gone up. So, it's a bit of a coin flip, or maybe it's 20 recessions. I think 10 have gone up or something like that. It's pretty much like 50-50. So to say that we have a recession and everything goes down and brace for safe haven, it's that's not necessarily the case. I still think that value is the play this year. I think that tech is great to get out of. I think if you have tech stocks recovering, I saw that today Elon Musk has taken a big stance in Twitter, and the Twitter stock is up $9 or $10 pre-market. Okay, cool. I was in Twitter a week ago at $35, and now it's up to $47. That's lucky. But there could be a nice broad recovery in Q2. We've talked about it a lot last week. I had this screenshot, or we talked about the Barclay Hedge Fund Index last week. I know I discussed it in Equities on Demand as well as in the Flex Trading Room. So we have 3 months finishing negative for the Barclay Hedge Fund Index, and even for the last 4 years. And I went back the last 50 years on the overall S&P returns, and April, May, and June for that quarter historically has shown a positive quarter. So I still think that there's a reason they have the saying sell in May, go away. If we have a decent April, momentum carries into May, things kind of plateau in June. I'm expecting there to be at least an effort to show a broader recovery. Look, you've got energy prices trying to be contained. You've got the Fed stepping up, trying to tame inflation. Inflation's the big deal. That's potentially political suicide right now. If we don't tame inflation, everything's going to change and vote them all out and drain the swamp or whatever. Okay, I'm not going to get political, but I'm saying that agenda makes sense to me. In the short term, let's pacify investors. Let's keep the economy happy. Let's keep it stable and not let a recession happen on our watch. But if we just see the inverted yield curve, which is a, pinpoint historical clue that we're going to have a recession 8 to 18 months away, that's a window that I think we need to be prepared for. But recession does not mean that stocks have to go down. Okay, it means that I think inflation is sticky. I think it's going to be here to stay longer. We're going to look at energy prices. We'll be watching commodities. We're taking trades like this. So watching oil, we're trading at 102. I mean, if oil goes sideways and we start to see this type of movement in oil, okay, I mean, is that mission accomplished for fighting oil prices? I mean, it's obviously not letting it run away, but we could go into a period of consolidation where later on oil breaks, or maybe it breaks, or maybe it does nothing. It becomes a very frustrating trade. I don't know yet, right? So we're going to have to see what oil wants to do. We're going to be following, commodities in general. Take a look at gold and silver. Take a look at the dollar index. Gold is still off the highs. I'm trying to decide whether this is high, low, and gold is going to come back down for one more slide back into 1830 or this symmetry around 1800, or if the dollar is going to take a little bit of a dip going into Q2 for some risk appetite and gold continues to rally. But remember, what poised this rally in the first place? It was inflation, right? The dollar didn't really get weak. I mean, the dollar's been strong, and gold got strong, and oil got strong. So we had a lot of broken correlations over the last couple of months. So I could see the dollar still going a little bit higher. Oops, that's oil again. Dollar right here. Okay, Steve, I'll take a look at that. Yep, thanks. Here's dollar index. Again, still fairly indecisive. Chart alarms are set above and below. So I'm waiting. Do we have a breakout? Do we have a breakout? I'll be watching. Makes sense we could fall into channel support in the yearly pivot, but also based on the rally from multi-year lows that we could find our resistance at multi-year highs. So it really is, I'm torn. For the last probably 6 months, I've been hedged on a lot of dollar crosses. So I've got some winners with dollar strength. I have some losers with dollar strength, but I will manage the winners and I will manage the losers. And vice versa. If the dollar index goes down, I will have some winners, I'll have some losers, and I'll manage them, right? All right. We're good on oil, gold. Let's take a look at silver. Silver, if we can hold the backside of this trend line, either way, I still like silver to the upside. Now, this may drag on a little bit lower. I'm watching these recent lows. I like all the support here around $22.50 to $21. I'm still looking for silver to head up into this $29 to $30 resistance. Again, I don't know if we need to see a big drop in the dollar to have silver and gold perform well, or if this is, a recessionary play where we actually hit those numbers and it's inverted yield curve and recession starts to get, those recessionary instruments like silver, like gold could be played out pretty well. But I still like the technicals on silver a lot. In fact, I like it more than gold. It's also way more affordable for sure. Okay, cryptos still had a pretty good weekend. We paused a little bit after seeing a huge run up in total crypto market cap. Bitcoin, Ethereum's had a good run. Solana's had a great run. Terra Luna's at new highs. We've had a 20-some% rally just in the last 4 weeks, looks like. So it was up around 28% off the 4-week lows. We've settled back into around a 23%. Now, what's interesting to note is for the year, if we started out trading, let me go back to the yearly pivot. So it looks like we start right here for the year. Okay, I mean, we're essentially break even for the year on Bitcoin. Okay, we were up briefly, but we're break even for the year on Bitcoin. We're still down with one of the worst quarters of the last 2 years in equities. We take a look at the SPY really quickly, or the S&P. We're already to start the year. We started out literally at the highs. Okay, we're seeing if the market's going to continue this Q2 rally and get this push going. So from the start of the year, market, closed last week with the end of the quarter. I know that we technically closed on, that would have been Friday's candle, but Thursday technically was the close for the quarter. So around 4.5% on the SPY to the downside. So equities down, NASDAQ was down worse. NASDAQ had a larger swing. The Russell was down. So let's go here. Started out around these highs. I mean, the NASDAQ is down around 9.5 to 10%. S&P is down 4% or so. Dow's around 4%. So the market starts off in a bit of a hole. Historically speaking, market has a pretty good history of showing that it bounces back. So having one negative quarter, we typically bounce back with a positive quarter. Of course, we'll find out. DIA following the Dow up here near the highs, closing last week around 5 to 6% down. So every major index is in the hole right now, and we're going to see if it's able to claw back, and maybe by Q2 they're at break even, which is crazy because Q2 would be, if we get back to break even, that means that we're essentially back up to all-time historical highs once again. So what's the overall outlook on the markets this year? If we carve out any positive gains, let's say the market does finish, anytime this year we're back at new highs. I don't think we're going ballistic. I think we're going new highs, expect volatility. We'll grind out new highs, expect volatility. It's gonna be tough. I think it's gonna be a difficult market to navigate. But active trading, sector positioning, trading the right currencies. I think the one steady deployment for me this year is going to be long crypto. Part of that is, this transition from bonds. I think there's still a lot of money out there that's willing to take risk. I think that risk is going to go into crypto because it's probably going to be one of the better performing assets. But that's my opinion. So I still like dollar cost averaging in Bitcoin and Ethereum, crypto in general. Not meme stuff. I'm not really chasing like altcoins or anything like that. There could be a phase where we have a better performance on altcoins versus Bitcoin, but for the most part, 60% market cap is Ethereum and Bitcoin for now. But I think that'll be a pretty interesting story to see how that develops this year. If we still have inflation, I still like energy. I still like materials. I think financials are good with the central banks raising rates, but I'm definitely doing whatever I can to deleverage and get out of the concentrated tech market. So, I mean, Facebook could be long ways from regaining highs. ARK Investments, if you want to track and see how do I trade technology this year? Look at ARK Investments. Kathy Wood, I mean, you saw the article we shared last week during these sessions. ARK, ARKK, I mean, tripled the S&P rally. Right, but what it failed to mention is that it's been down 60% off the highs, okay? And this little 30% recovery still leaves it down 25% for the year. So it's not even close to having a broad recovery. Like I'm in ARK. I'm in ARK with a 75.51 break even. Believe me, I would love to see a recovery in tech. I'd love to see this, shorter term recovery. But I'm not being silly and thinking that we're going up to new highs. I'm not really interested in holding tech or something that is growth centered that needs deflation. I'm not interested in holding any of those instruments for longer than I have to. Okay, so if ARK gets back to $85, $90, $95, $100 has already been my set price target. If I hit it, fantastic. If I get out at $10+ a share, I'd be happy with that too. So I have chart alarm set, but if you want to watch what is, do you trade technology this year, you can see what is happening. Across the board, disruptive tech, it's tough. It's already fallen so hard, and in an inflationary environment, this is not going to do very well. So we could have recovery. There's been billions of dollars in inflows to these ETFs, but that doesn't mean it's going anywhere. It could help in the short term. We have mergers and acquisitions. We obviously have some buybacks. We have some stock splits, big ones coming up this summer with Google and Amazon. So it's going to be interesting. Okay, Linda, Litecoin, sure, we'll take a look. Litecoin's had a nice little break. So falling wedge break. I like Litecoin. We talked about this the last couple of weeks, trying to buy here in the low 100s. And I have room back up into these pockets around 180. I love this yearly pivot and pivot cluster all the way back up here towards 220. So Litecoin, my break even on Litecoin, I haven't really had to add to it much because my break even's like $30 or $40. So I'm just sitting in Litecoin. But as far as my profit targets for this year, or maybe looking at converting, if I have some nice cash on Litecoin back here at 220, I might take some of that profit and roll that into Bitcoin. More than likely, I'll just keep rolling into Bitcoin. Other ways, if you're not explicitly in cryptos, if you don't hold any crypto, if you're not with your cold storage stuff or your keys, you can trade in stock markets for the most part. GBTC is a correlated ETF. It's a Grayscale Bitcoin Trust. I've been buying this thing in the lows. 24.61 was where I bought just recently, trading up to 31.84 with pre-market this morning. We have a nice pivot cluster here around 38. And if Bitcoin finds its way back to new highs this year, I like this instrument also going back up towards new highs around $56. So, this has the opportunity to give us about 100% return. Not going to complain about that position, obviously. You've got some miners that I'm pretty interested in. I did a video on my YouTube channel on my top crypto stocks. You can search that in my YouTube page, youtube.com/Chris Pulver. Some of them were, companies, tech companies that were putting Bitcoin on their balance sheet. Big one, Michael Saylor and MicroStrategy. Tesla's been doing it. Square or Block, it's Block Inc. now, which is SQ is the ticker. PayPal, payment systems, Visa, MasterCard, all these things are going to start having some type of evolution where they accept crypto or will accept crypto or are already in it. I don't know. Check out the video. I think there's 10 stocks. And then I also talk about some mining companies. And the one that I really like, and we've traded this in Equities on Demand, is MARA. This one is a miner that is settled into North America. Some of these miners that were in China, they left China to go to Kazakhstan. Again, tensions, gridlocks, internet shutdowns, disruption, lack of continuity. If some of these miners are setting up shop here in the US or in North America, I think that's a little bit better for stability, hopefully, without having major business disruptions. And if we see some steady inflows with mining costs are slowly increasing, if that also boosts the price of cryptos in general, then I think this is a pretty good one. So I like this. We bought this recently, lows in the 20s. We were going to own it here at like $20 and change. Made some nice profit on that. We're back in on some credit spreads, and we'll see what we get. But I'm looking for this. If Bitcoin starts to rally, this stock will do well. When Bitcoin made new highs, this stock was way up here. So you buy this thing at 20 bucks, it was up as high as $80. You buy it here again at $20. If we make new highs on Bitcoin, this could be back up here to $80. That's a 3.5 to 4x return. Okay, so there could be some good plays out there if you're interested. But again, it's still risk. So trade accordingly. Let's see here. QuantumScape. Yep. So I did talk to a buddy of mine. We talked about QuantumScape. We like it overall, but it's more of an EV play in my opinion. So I think QuantumScape is in the electric vehicle realm. So if you were with me last Friday, somebody brought up QuantumScape QS. It's a lithium company. Look, overall the stock is fine. Like right now, if you wanted to get in, it's fairly inexpensive. I'm sure there's cause for a rally. Okay, but this isn't like the exclusive monopoly of lithium products. Okay, this is one of many. It's going to be one of many peripheral suppliers that are in the EV market, and I'm a little burnt out on EV plays. I made some good money on Fisker. We made some good money on Tesla. We made great returns on Ford. And I think we like Honda Motors as well. We made some money on that, but they're not really a big EV player right now. But then you have all the crappy ones. I'm in XL, I'm in Ride, I'm in Workhorse, and all those were just trash. And then Workhorse last week finally started to show up. So Workhorse is off the lows. We're trading at $4.79 off of lows at like $2, $2.60. But Workhorse has a lot to recover. I think my Workhorse break even's like $10 or $11. So I'm watching. This is also a highly shorted stock. We have tons of inefficiencies way up here towards $20 to $30. That's going to have to be like the squeeze of the year. Like this is essentially going to have to become like GameStop in order for this to squeeze from 4 to 30. I'm not saying it can't happen, but I'm not counting on that. So I will be pleasantly surprised if Workhorse starts to recover more. But this all goes into my narrative of QuantumScape. I like where it's at. I think it's inexpensive. But if I bought QuantumScape, my job with options would be to lower my cost. If I started buying it now at $20 and change, I would be looking to, sell calls, lower my cost, do credit spreads, lower my cost, roll my calls if I want to give this some upside potential towards the mid 30s. There's a yearly pivot up here at $38. But do whatever you can to lower your cost as you hold the stock. Because we essentially based here at $13. We came back to equal lows at $13 and change. And there are a lot of stocks out there right now, IPOs and SPACs. And somebody asked me last week in an email, SPAC is SPAC, Special Purpose Acquisition Company. That was essentially, it's a bit of a loophole to allow a blank check to bring a company public, and it's a lot faster, like a workaround to an IPO. And SPACs became super popular in 2019, 2020, very popular, and they have been under a lot of pressure and a lot of scrutiny, and now under SEC regulation. Like they're being looked at much closer. Because a lot of IPOs in the last 2 years and a lot of SPACs in the last 2 years have fallen below where they came to market. And that's not a good thing. Okay. So it's just the SPAC landscape has changed. I don't know if QuantumScape was a SPAC play, or if it IPO'd. I mean, you're looking at this price. I mean, we went from $13 to $130 and then literally back to zero. So you have 100% decline from where this thing started. That's not good, right? So that's why I was a little skeptical. I wanted to do some more research. So if you're feeling the, supplier to EVs, fine. If you want to work on lowering your cost basis, that's fine. That would be my angle on this. I like it. Okay. It's a lot of future growth potential, but I'm trying not to get over concentrated on future growth. I think right now the market wants to see legit revenue, good fundamentals, strong outlooks for this quarter, the next 1 to 2 years, as we have some troubled waters ahead. Okay. All right. Coinbase. Yep. So Coinbase we're looking at last week as well. Coinbase trading at 187. I will end up. I've got some additional covered calls to do this week and some management. Trying not to have a ton of 4.8 expirations, but I have lots of new covered calls that I'm gonna have to add this week. Probably like 12 to 13 stocks from last week that were either lowering my cost. I didn't lose any stock last week because I rolled. Did I lose Uber? I think I rolled Uber out to this week. Yep. So I rolled Uber out to this week for a $34 strike. I might lose Uber for, is that my real break even? Might be a little bit lower than that now. Let me check. So I rolled it out to the 4.8 expiration. If I lose it above $34, that's fine. My break even is $31.47. So I'll lose Uber for $2.53, which again, that's fine for a little repair. Other ones, Pfizer. I'm gonna have to double check my stock stuff this morning, but I did not take assignment on Pfizer. I think the credit spread would have expired worthless last week. I just lost the 25 cents. I did take some assignment on, what did I take assignment on? We took profit on Micron. I rolled Intel out for another week, and I go out to the 29th now for the $51 call. ConAgra, we have earnings this week. CTRA, that's what it was. CTRA, I was willing to take some ownership on this one, and we'll see if we lose in the next, not this week, but next week, if we lose above 28 bucks. So anyway, we'll talk about that more this weekend. Equities on demand. We have some good winning credit spreads this week. And then in Forex, take a look at currency strength. Okay, Euro's getting smashed this morning. Swiss is back to baseline. Dollar, pound, and yen all equal. We have rising commodity prices once again, rising commodity pairs. New Zealand, Aussie, and CAD doing pretty well. So, being a short dollar CAD, I think that's a pretty strong position right now. Being long Aussie dollar or being long New Zealand dollar, I'm playing both of those. I'm also looking at a shorting opportunity on Aussie New Zealand if we see some good structure, but I'll be watching that this week. I'm not sure where the Eurozone is just getting just hit hard right now. Last week it was back and forth. We had a decent recovery against the Swiss. Now we're showing that the Swiss remain stable and the Euro gets hit a little bit harder. So anyway, I'll navigate that crap this week. And any other instruments, any stocks, any cryptos, any Forex pairs you want to take a look at. A lot of it JPY related, dollar yen. Okay, last week if you're following the newsletter, you had a chance to grab about 200 pips, pretty easy. Just a sell trade at 123.35. We came within 10 pips of that third weekly pivot. Pretty easy 200 pips. So that was a nice little trade. I'm still short on dollar yen. I'm still looking to get short. And I'm not building a big position here. I mean, this may end up rallying back up to these highs and then having a bit of a correction coming back down to the same level. We might have a bit of a topping pattern here. This might fall back a little bit lower. I'd like to take the dollar yen back to 119 or 118.50. But like I told traders the last couple of weeks, I'm not sitting here trying to hold the JPY pairs for tons of strength. If this just goes high, low, lower, high, lower, low, and rebalances, I will be happy with that. Like super happy. But I'm going to be watching JPY pairs this week. Okay. Pound yen, yep, similar. Pound yen, we had a nice, retreat. This one did come down as well. We had weekly pivot, third weekly pivot. That price ended up finding off of that high. So if this is a high to low, lower high to lower low, we have a beautiful pocket right in here, past resistance becoming support, and a monthly pivot for April. So I would love to see a pound yen that is somewhere in here. If you go high, low, look at some Fibonacci levels. I can zoom in on a 4-hour chart and show you what that looks like. So something like this. You got a little high-low swing, and we can look for a trend line break. So that way, if price does continue to go up, don't jump in and short it early. If we break the trend line, then we can get involved with that short right there, take it back to that monthly pivot, as well as a 127 extension and past resistance becoming support. Also, the spot that I look for is somewhere here between like the 5.0 and the 618 retracement level, as well as an equal high. If I'm looking to short this and I'm looking to short it high, what better spot to short it at than the highs? And there's little risk in that trade. If you're not in the pound yen, shorting high with a stop loss, probably a good idea because that's a really nice reward to risk ratio. So a lot of these JPY crosses, if we have high to low and a pullback, looking to see if we can break a trend line and then work our way a little bit lower. Come back down to last week's lows, come back in and find some of these fresh April pivots. Sorry, this is my dog. You can probably hear him. But that's what I'm looking for this week. Okay, a lot of the JPY crosses have the same type of alignment. I want to take a look at Euro Swiss. It's back below 102 right now. We're trading at 101.69. I am prepared for this Euro Swiss to do a couple of things. One is perhaps we're doing something like this, where this is going to continue to correct off those parity lows in that swing. So this could be a low to high swing. This could be setting up for some type of retracement pattern or flat pattern, come back in deeper to this weekly pivot, and then rally back up. We've got a couple of pivot levels I'm watching. So we have a weekly right here that price is finding. We have a weekly for this week that I can see price coming back and finding as well. So I'm expecting a little bit more consolidation on the Euro Swiss, and then look to see if there is a kind of basket relief rally coming. Dollar Swiss I'm still long on. Dollar Swiss has been back and forth quite a bit. So we were as high as 94.50. We came down recently to 9,200. We came back and found this monthly and weekly pivot cluster right there. I still like long on Dollar Swiss. Overall, I want to see if we come anywhere close to revisiting 94, 94.50. I still have symmetry targets up to 96, 96.50. But this might be the trade that requires tons and tons of patience. And if that's the case, I've got to be ready for it. I'm long New Zealand dollar. I'm looking to see if we can break these recent highs. We are just shy of the yearly pivot. Should pop up right here. There should be a yearly pivot around 7,000 on this Kiwi dollar. So we are just off of that right there. That's 69.99. And hey, good. That's a stock that's doing pretty well. Nice little run on GDRX. All right. I'll get logged in and check that out. I bought this thing around $16, $15 or $16, I think. Let me double check. GDRX. I didn't even add it. I've got it in it's Interactive Brokers. Hang on. All right. I'm going to check and see where that's at. That might be worth taking some profit this morning. All right. But it's going up, which is good. Okay. I forgot what pair I was on. I was on Dollar Swiss a second ago. Euro Swiss we talked about. Oh, New Zealand dollar. I was looking for that yearly pivot on New Zealand dollar. That's it. So there it is right there. So New Zealand dollar yearly pivot right there around 7,000. See if that gets activated this week. We might see some additional flows where commodity pairs do well. 7,000 is a potential rejection point, just so we're knowing, where we're at technically this week. There's a nice channel resistance right here, plus that yearly pivot. If the New Zealand dollar heads lower, to me, this is what risk off could look like. We could have JPY strength, dollar strength, Swiss strength, all here with risk off trading. If the Aussie, here's what I'm looking for. We'll talk about this a lot in Flex this week, which, by the way, Flex, we have Tuesday, Wednesday classes. Equities on demand, Monday, Tuesday, Wednesday classes. If we see this week, these three currency pairs, the New Zealand, the CAD, the Aussie, if they are stronger this week, that is risk on, that is stronger commodities, watch oil prices, dollar weakness, probably JPY and Swiss weakness as well. And certainly, I'm guessing Euro weakness. If these are strong today, but they are weak this week, then that's, dollar strength. That might be some risk off flows. I don't know. I don't think that's really the case this week. I think that Q2 is here. Look, the market has navigated so much crap and digested so much stuff in the last 3 months, right? We're digesting all the information out of Russia, Ukraine. It's still ongoing, right? The market got a little excited about a potential ceasefire or some peace talks negotiation. It's still not set in stone. Like it's still not done. It's still going on. You have oil prices, inflation, very sticky, and a huge concern across the board, globally, let alone in the U.S. You got the Fed, which now the market can digest. They're going to raise rates 6 to 7 times this year. Okay, so the market takes all that in stride, and what are they going to do? There's so much money looking to go somewhere. It's probably going to go into real estate, probably going into equities, because money is not going to do anything sitting in a bank, sitting in a bond, sitting in cash, right? All you're doing is you're locking in losses if that's the case, because inflation is easily, 4, 6, 10%, depending on where you're at. We talked about this. I've shared this link. Where is that inflation? So look at your G20 countries right here. I'll share this again in the chat. If you're just following some of these metrics, right? I mean, just look and see where the numbers are at. These are some of the highest inflation numbers we have seen in 30 to 40 years. And for us to think like, oh, the Fed's going to raise rates and that'll just make it go away. It's not going to go away, right? I mean, pandemic wise, I know that it's now like a weird excuse, like, oh, supply chain issues. It's like, right, but it's happening and it's still real and there's tons of disruption, and we've had all these investments in like technology in the digital world as we're kind of making this transition to Web 3.0, but in the physical world, like actual shipping containers, actually, manufacturing things, actually getting goods and services to people and companies around the world, that is still very disrupted. And that is why inflation is here and sticky. So again, one little dial of raising interest rates doesn't make it go away. So I think it can plateau it, but I don't think it makes these numbers go down dramatically. It's enough to maybe calm investors, but I mean, I think you have to see where companies are really at. If it's a company that is benefiting from inflation, benefiting from appreciating assets, those are the companies I want to be investing in this year in stocks. Okay. Yep, I saw that. Must purchase Twitter stock. He now owns $3 billion worth, 9%. Yeah, I know. That's why Twitter got a big jump this morning. Oops, don't do that. Twitter had a huge jump this morning. Pre-market was $48 a change off of 39. It's crazy, right? Elon Musk just does what he wants. Where am I at here? So GDRX, I own. Yeah, I'm up $6,400 on that. I own it at 1387. Oops, GDRX. There it is. So it's getting a nice little rally. I mean, I could probably sit on this a little bit more, but come back and fill this gap. I didn't intend to hold this very long. So, I mean, it's probably worth taking some profit on it today. 2042. I think I'll take some profit on it. I mean, if I'm getting up a little bit high, I mean, it'd be great. Yeah, $22, $23, sure. But I think I'm also, up a decent profit amount. If it pulls back, I can always revisit, getting in at $16, $15. So I'm going to take some profit on this today. No. GDRX close. So let's see if we can make a run to like 2045 today. All right. I'll let that just hang out for the day. Set a chart alarm here at 2045, and then I'll check my P&L later today. Hopefully get a nice little run. All right. Anything else for today? We've just been kind of talking about a lot of stuff. I do have some expiration I want to take a look at really quickly if you would do me the honor. Here is equities on demand for this week. I'm going to take a look at our 4-8 expirations. I don't think we have a ton. So we have CSTM, which is an aluminum play. We started a credit spread on that. And we have MARA, which is that mining company that's essentially mining Bitcoin in North America. So the 31 by 30 50, the 19 by 18 50, those are 50-cent spreads, expirations this week. I also, in class today at 10 o'clock for Equities on Demand, will be talking about adding a bunch of covered calls. So I'm still looking at the following stocks. Tilray, okay, which came up as high as $9, and I did not get filled, which I was really disappointed with. I thought I had like a 75-cent covered call at $9, and it didn't fill. And that was supposed to be a 401 expiration. So instead, I ended up getting an 850 call for 46 cents. I'll keep preparing this one, but chart alarms are set. So Tilray, I'm putting in a new covered call. I did that last week. Chewy after missing earnings, I still think Chewy's fine. I own this thing in the low 40s, and I put out a $45 call for this week, so I'll be monitoring that. Uber, I rolled the cover call last week. I might roll it again. Honestly, like if this makes new highs, I might roll it out another week and go to the 414 expiration and maybe keep it at $34 and just grab another 30, 40 cents. And when it's all said and done, price is up high enough that I still get it called away, and I can drill my cost down by, if I can do one more rolled cover call, I might drill my cost down by $1. There's still some upside potential here. I like, Uber up to the mid 40s. I have another break even on some shares at 39.47 that I'm just going to sit on for a little bit. Okay. Pfizer didn't take any assignment this week, but I'm looking at some covered calls out to $60. Coinbase, that one expired. I'm going to have to repair that one going back into like a 210 covered call. OKTA is another one I'm going to have to cover. This one's trading at 154. Hopefully we get some legs on OKTA. Intel took a hard hit last week, but maybe we come back and rebalance. I'm trying to lose this around $50 to $51. What else? ConAgra, we have earnings on ConAgra this week. Hopefully this is going to continue to run. We're trading at 33.34 earnings this week. I want to see if we can get up here towards 35.50. So I'm going to set a chart alarm here at 34.17. It does sound, from what I read this morning, it sounds like we're getting some food companies passing on prices to the consumer. What do we have here? Financial Literacy Month. We have unions and Amazon. Inflation in aisle 5. Pantry powerhouses like Kraft and Kellogg have hiked prices to cost as costs are surging. So Kellogg or Kraft, so KHC, they've been passing on prices. Kraft Heinz at 39 and change. We have a cover call out to May at $40. This is another one that, they pass the consumer. It might pinch the wallet a little bit at the grocery store, but look, people are still going to eat. It may not be, I don't know, maybe you go into the store brands. You go to Whole Foods, it's $3.65 versus whatever, Kraft food there is. You buy, the Malto meal, you buy the off-brand cereal, whatever. Maybe that's where people are going to save a few bucks. But a lot of those are still owned by the same giant companies anyway. So anyway. All right. I'm going to go and wrap it up there. We got a little break before equities on demand at 10 o'clock. So students in that trading room, I will see you in the next 17 minutes. We got lots to discuss today, some credit spreads to keep an eye out for. Look at our 4-8 expirations. It is a modified week for me. I'll be traveling Wednesday, Thursday, Friday. So we'll have sessions up until Wednesday morning, but just alerts and updates and stuff Thursday, Friday. But let's make it a good week as usual. We just keep grinding away. And we'll be watching Forex. We'll be watching stocks and options. We'll be watching cryptos, the usual. Okay. All right, everybody. Thanks a lot. Yep. If you do me the honor, just press that thumbs up button for me. Help the YouTube algorithm, support the channel. Appreciate it. Helps a lot with these live sessions. That being said, because I am traveling this week, I'm not going to do a live session on Friday. I might do a video post instead. If I can just post a video and post it to the channel. If I do that, I'll do like a weekly recap for Friday. But just look for that. But again, there's live session today. I'll see you everybody in the trading room this week. And then no live session for Friday. But we'll be back at it next week. Okay? All right, sounds good, everybody. Have a good rest of the day. Let's have a good week. See you soon. Bye.